Hey, this is Bill with your Friday Market Minute. So, first thing we want to look at is what's up or down with rates. So, rates are still much better than last year's. You can see we started to trend above our 100-day moving average earlier this year, and we haven't come down to it for a while. But this month, rates did get a little worse because we started to bounce off our 100-day moving average here. So, this was still some of the best rates we saw earlier in the month, but then we started to bounce off of it. If we look at since last week, rates started to hop up again, but the last few days, we definitely saw a turn for the worse as we bounced down again against this 100-day moving average. And now we just need to see if we're going to bounce off or break below the 100-day moving average. And that hasn't happened since we started this great rally earlier in the year. So why are the rates moving? One word summary I would use is optimism. There's definitely some optimism that's returned to the markets. The U.S.-China trade talks seem better. I think actually they're meeting right now. There might be a statement that's due by this afternoon. So there's a lot of renewed optimism there. The Brexit nonsense is still going on, but word is that there might be a breakthrough there. So some of those global slowdown stats are still tempering too much optimism. But nonetheless, risk appetite has returned for stocks. And when people are buying stocks, they're not buying bonds. And so that's usually when we start to see our rates go down, when the people flock out of the bond market into the stocks. But how's the CT market doing for housing supply? If you're in that entry level, housing supply is actually down a little bit since last week. I calculated it at 4.5 months supply. So when you have anything under 6, what you're probably going to see is a little bit more competition for what's on the market. So you're going to have to probably go close to asking price, and you're going to be probably facing some other bids. That move up level is still at 7.5. That's up a little from last month. Upper level is down a good amount from last week. I don't know if that's from people pulling their listings that have been on the market for a long time, or if that level is starting to see a little bit more action. Some final thoughts, though. Just heading into the holiday weekend, there really shouldn't be this much movement in rates today, but the renewed optimism, as we talked about before, is causing a little bit of a shakeup that's already seen gains made during the week. It's possible that locking next week will be a smart strategy, as in my mind, 3 days of nothing but good news following these trade talks is an unlikely scenario. Obviously, the rates will benefit from any hiccups, any uncertainty, but it's also very hard to predict movement in the current environment. The market that we're in today, it seems to be very headline driven. So all it takes is a few positive news pieces, and our rates definitely react off of those. So thank you for joining me today. This was your Market Minute, and I'll see you again next week.